Hey everyone, Steve here from 11ish, a channel where we talk about lucrative investment strategies and opportunities based on the requests from the 11ish collective. In the last video, we talked about what price to earnings ratio is. That is usually the right benchmark to use if a company is profitable. This time we're going to talk about what the price to sales ratio is. They're both incredibly useful and used for different purposes. So, if this is the type of content you've been looking for, please hit that like button for me. And let's get started. As an investor, how much are you willing to pay or invest in order for the company to generate $1? If the price to sales ratio is 20, that means that the investors are so confident that this company will make money in the long run that they're willing to pay $20 for every single dollar generated out of revenue. And also keep in mind that we're not talking about profit here, we're talking about revenue, because the PS ratio is focused more on growth. How fast a company can generate value. In other words, this benchmark does not talk about the sustainability of a company. It talks about the growth potential and how optimistic investors are today towards that growth potential. For example, as I make this video, Tesla's PS ratio is around 23. So essentially, investors are saying that I'm willing to pay $23 for the company to generate $1 in revenue, because if I put my money into Tesla, it's going to create more and more revenue, and eventually it's going to catch up. It's like you buying an apple for $1. That might sound expensive, but that apple will depreciate in value, whereas Tesla will appreciate in value, and the longer you hold it, the more valuable it becomes. That's the idea. This example should also clearly indicate to you that if a company's PS ratio is high, then a lot of that optimism of the expectation of future revenue being generated, the future growth being created, is already built into the company's stock price. And just like the PE ratio, the numeric value doesn't tell you the whole story. There's a reason why this is a ratio, right? The idea here is that you find stocks in similar business verticals, similar ideas that you trust in, and you get an average of all the PS ratios within this cluster. And within this cluster, you'll have a better idea of what an average PS ratio is in this time in history. From that, you can glean on whether this particular stock you're looking at is overvalued or undervalued. Going back to the Tesla example, Tesla's PS ratio is around 23. If you were a more traditional investor, not looking at the green aspect of Tesla as a company, then you're probably comparing it against Nissan, Toyota, Ford, and BMW. Now, I think there is an argument to be made that all of the companies I've named also have a green play as well and have a lot more money, so that if they actually wanted to go into the green space, it's a lot easier for them to go into when they think the time is right. To me, that's a right comparison, right? So I'm looking at these companies as a cluster, and I'm seeing that Nissan, Toyota, Ford, BMW, their PS ratio is 0.3, 0.86, 0.42, and 0.57. So all of them are under 1, their PS ratio. If you invest in one of those companies, you're essentially saying that for less than $1, you're expecting the company to make more than $1 in revenue. You can see now that there's a clear indication that people are incredibly optimistic about Tesla. Between car companies, the comparison is clear. Now, you might also compare it against green energy companies in general, for example, Siemens, or maybe compare it against GE, right? Because those are energy companies that are creating things like giant energy windmills or solar panels, right? So based on those two, Siemens has a PS ratio of 2 and GE has a PE ratio of 1.5. So based on that indication, Tesla is still way more optimistically valued in terms of stock price. So based on all of this information, it doesn't necessarily mean that the Tesla stock price is wrong. I'm not saying that. What I am saying is that people are expecting Tesla to perform well already, a lot better than all of these companies I've named. And what that also means is that if Tesla does not execute, then the optimism of Tesla outperforming everybody else will get adjusted. It's like you make a bet, things don't go as well as you think, you're going to start adjusting that bet. That is human nature. And because of that fact, at least is likely for the Tesla stock price to adjust towards the average PS ratio. You see where I'm coming from, right? So if that's the case, that means that yes, the stock price might hold up. Yes, there might be a very good reason for the stock price to be this. But if anything goes wrong, it's going to adjust downwards towards the average PS ratio, which is much, much lower than its current PS ratio, right? It's going to go from the PS ratio of 24, the stock price is going to keep going down until the PS ratio is around 1 or 2 or 4. If that's the case, there's a high potential for a lot of money lost and a low potential for a lot of money to be made here. For the company to catch up so that more revenues generated per dollar is a business. So it will inevitably take a little bit longer than what most investors think it will take. So now that you know what the PS and PE ratio is, I highly implore that you look at your own portfolio or at the companies that you're interested in investing in. See how it makes sense. This essentially helps you create this extra step, extra reason in looking at the competitors as well. Maybe the competition is not so bad an investment after all. Not necessarily because the competition is a better business than the one you want to invest in, but there's a higher opportunity for that stock price to go up because it's undervalued. You see where I'm coming from here? That's how you find value. You want to avoid the crowd. You want to find that little extra little thing that's on the side that everyone's ignoring, but also has a potential of making a lot of money. This is how you identify it. All right, guys, I hope you found this video useful. If you have any questions or concerns, please leave a note. Thanks for watching, and I look forward to working with you next time. Thank you.